I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. President Trump says when it comes to his plan to impose new tariffs, other countries have more to lose. He spoke at the White House during a joint news conference with Sweden's prime minister.
You know, when we're behind on every single country, trade wars aren't so bad. Do you understand what I mean by that? When we're down by 30 billion, 40 billion, 60 billion, 100 billion, the trade war hurts them, doesn't hurt us.
Two of America's top intelligence chiefs, Dan Coats and Robert Ashley, are wary of North Korea's claim that it's ready to negotiate on its nuclear program. That's after South Korea announced Pyongyang agreed to stop testing weapons if it holds talks with the U.S. on denuclearization. The two Koreas also agreed to hold summit talks in late April. White House aide Kellyanne Conway is accused of violating the federal law that prohibits government officials from using their positions to influence political campaigns. The Office of Special Counsel, which is unrelated to Robert Mueller's office, says Conway violated the Hatch Act last year when she advocated for Republican Roy Moore in the Alabama Senate race. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg, and Bloomberg Technology with Emily Chang is next.
Chang, and this is Bloomberg Technology. Coming up, the Amazon agenda, our deep dive into the ever-expanding footprint of America's e-commerce king, and not just the companies, but industries potentially in its crosshairs. Plus, hey, big spender, Uber blows $10.7 billion in just 9 years. We're taking stock of the cash burn at the world's most valuable startup. And Box shares take a beating after earnings. CEO Aaron Levy joins us later this hour. But first, to our lead. We're taking stock of the state of Amazon, from its ballooning e-commerce and cloud businesses to newer forays into groceries and hardware. In January, Amazon also announced a healthcare venture with JPMorgan Chase and Berkshire Hathaway. Come February, the company acquired doorbell startup Ring for roughly $1 billion. And now in March, Amazon is looking into providing customers with checking accounts and has announced it is expanding Whole Foods deliveries to Amazon Prime customers in more U.S. cities. So how do all these announcements fit into the complex Amazon operation? For more, I want to bring in our Bloomberg Tech senior executive editor, Brad Stone, who also wrote the book on Amazon. How does this all fit together under the umbrella of Amazon operations?
Everything you just mentioned. I mean, it's a company that one of its products is its culture. And the way that it decentralizes and empowers teams to go innovate and even requires them to innovate. And so you've got, tens of thousands of people working for Amazon around the world looking for growth and expansion opportunities, and it yields everything you just mentioned.
Not every new business, though, they have started has succeeded, right?
Oh, absolutely. I mean, they spent 10 years trying to make grocery stores work. It didn't. That's the Amazon Fresh Delivery service. It didn't work as well as they had hoped. Resulted in last year's blockbuster acquisition of Whole Foods.
So talk to us about the expanding Whole Foods delivery business and what that means.
I mean, there's so much they can do inside Whole Foods. They can bring Amazon Pay into the checkout. They want to do a loyalty club for Prime members. They could redesign the grocery store, make it friendlier to customers. But the easy stuff is delivering from those supermarkets and from the Whole Food supply chain right to people's homes. And that's what we're starting to see in a couple of cities, including here in San Francisco. My colleagues Olivia Zaleski and Ellen Hewitt wrote a story about it today about how poor Instacart, that had the delivery relationship with Whole Foods, is now getting shunted aside to the back hallway as the Amazon workers come in and start delivering groceries to people's homes.
Gene Munster, who's watched Amazon for a long time, now at Loop Ventures, predicted earlier that Amazon might buy Target next. Take a listen to what he had to say in January.
The future of retail is going to be a combination, and I would bet that investors would view this as Amazon. The takeaway would be Amazon's taking over the world, and that's a good thing.
Is Amazon taking over the world a good thing?
Oh, well, maybe for, for Amazon investors, obviously, the company's performance has been stellar. The stock price has multiplied by a factor of 4 just over the last 4 or 5 years. But no, I mean, obviously, like the bigger it gets, the more kind of industries it enters, the more questions about its sort of market power arise. So maybe we could say great for customers, certainly, that Amazon kind of brings its long-term orientation, willingness to lose money, to pass on the benefits over to customers in the form of lower prices. Great for customers, but sort of destabilizing to a lot of other industries and raising some questions about market consolidation.
It hasn't been all great news for Amazon over the last year. Roy Price, the head of Amazon Studio, left. Amazon Studio is struggling to sort of get back on its feet. Also, a big high-profile departure today, Amazon Prime's Greg Greeley leaving for Airbnb. What do you make of that one? Well,
Greg Greeley, he was in my book. He was an old-timer. He started in the finance department, and it was the first guy. There was a product, probably people don't remember it, Super Saver Shipping, where for the first time, if people wanted to wait a few extra days, they could get their shipping for free. It cost Amazon a lot of money, but it cemented the loyalty of customers, and that was the beginning of the pathway that led to Prime, another product that he headed up more recently, where they were basically using their efficiencies in the supply chain to pass on benefits to customers. So, a senior member of the team, someone that was going to spend some more time in the Whole Foods division, but that bench is extremely deep. Actually, the bigger story is how little turnover they have in the upper ranks, and so I think Airbnb, who's brought him over to be president of their homes division, just has a really experienced executive who knows operations and knows marketplaces.
Speaking of, the cost of delivery, these things that they're offering to customers, don't come cheap, and 2-hour delivery is really expensive on the Amazon side. Is that at some point going to hurt them, when they start to raise prices that are more comparable with what they actually are?
Well, you can always look at it as a cost curve. And in the beginning, yeah, it probably costs a lot of money, particularly when the distribution of customers that are ordering from things like Prime Now is small. But, this is the whole long-term thing that Jeff Bezos loves to talk about. They're willing to do that for 10 years. And as they get the concentration of customers in neighborhoods higher, then the cost per delivery comes down. And they're sort of uniquely situated to be able to do that and to kind of suffer the early bad economics for the longer-term payoff. So, yeah, it might look poor. It might look bad now when you've got one truck making one delivery in one neighborhood. But fast forward in 5 years, and suddenly that truck's full of stuff.
What do you make of Amazon buying that Ring doorbell company for $1 billion and their, efforts, Amazon Key, to have this sort of concierge service, a delivery person who can come inside your door and drop off your packages? I mean, even they have house cleaning services that they're testing out.
Right. I wrote about this in our tech newsletter, Fully Charged, on Monday. I mean, in the short term, Amazon is up against Google and to some extent Apple in this kind of voice assistant home automation world. And it's a novelty now, and people love, quizzing Alexa and getting the weather. But in the future, it's got to be utility. So it's got to be opening your door, dimming your lights. And, Amazon works with third-party appliance makers, but the more they can bring in-house, probably the better experience it is. And then you're right, over the longer term, not only allowing the delivery guy to come in your door, but maybe monitoring your door from work, letting your housekeeper in, letting the plumber in, not having to wait at home for the cable guy, all sorts of things. I call it the true lock-in, when they control your doorway. It's pretty powerful.
And maybe even a little scary. Okay, Brad Stone, our senior executive tech editor, thank you so much for stopping by. All right, later this week, we're also going to be speaking with Stephanie Landy, Amazon Vice President of Prime Now and Amazon Fresh. Tune in for that conversation this Thursday. Now, another twist in the Broadcom versus Qualcomm saga. The U.S. Treasury Department says Broadcom's attempt to buy Qualcomm could pose a national security risk. The agency says a sale could hurt Qualcomm's competitiveness by reducing research and development spending, which would threaten security. Government panel that oversees foreign investment ordered a delay in a Qualcomm shareholder vote that could have cleared the way for a Broadcom takeover. Coming up, more money, more problems for the world's most valuable startup, that is. Uber is burning through cash at a record-breaking pace. We'll look at where the money's going next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. If you see an Uber freight truck on the highways of Arizona, you will notice that its driver won't have his or her hands on the steering wheel. Uber has been sending the self-driving trucks on runs since November 2017. The trucks have a human driver in the cab, but they can only pick up cargo at way stations and take them to the Arizona border because they still aren't cleared to navigate city streets. No word yet on whether those trucks are being accompanied by a self-driving Trans Am. And Uber may be the world's most valuable startup, but it's got one big problem, and that is cash burn. Since its founding 9 years ago, the ride-hailing giant has plowed through about $10.7 billion, according to a person familiar with the matter. So where's all that money going? Bloomberg Tech's Eric Newcomer took a look earlier today on Bloomberg Television.
It started to be a little bit more open and shared 4 quarters results for 2017, but still it's not, a full public company sort of type statement. So you don't know exactly where all the money is going. But clearly autonomous vehicles, driver subsidies, legal fights, software engineers, and even sort of insurance costs are all some of the major expenses that Uber's face.
I mean, Uber would say it doesn't matter, right? There's money to burn. There'll be plenty more venture capital where that came from.
Right, and it's not a matter of them, running out of money. They have, last we saw, about $6 billion in cash on hand. So they have the money. It's just sort of more amazing the amount they've been able to raise, about $17.3 billion, and then the amount they've been able to spend, about $10.7 billion. And then there's just this question of whether the losses will ever sort of get under control. They lost $4.5 billion in their GAAP net loss in 2017.
So how do they stack up with other companies?
Right. We looked at companies sort of at when they had similar valuations around Uber's blended $54 billion valuation. And, if you look at Google, Facebook, Delta, even Amazon, they were all making money when they had a similar valuation. And some of them had larger revenues. So Uber seems not to have bought sort of bigger revenues necessarily with all the money it's spent.
What are the standard arguments that Uber makes, Eric?
Well, I think key in Uber's defense here is obviously the growth. This is a company that year over year grew, 90%, and I think Q4 over Q4 was something around 60%. So, there's still a lot of growth in the business at a very big scale, and I think Uber believes it's transforming transportation, and if ride sharing is only, less than 1%, significantly less than 1% of trips taken in the United States right now, then there's a lot of opportunity for growth if you believe that the ride-sharing industry is going to transform how we get around.
Also, I thought they were doing a little bit better with Dara Khosrowshahi at the helm.
Right. He's had some time, but it takes a while to turn a ship as big as Uber. But I think one thing that's been interesting when he spoke at the Goldman Sachs conference, he struck a much more growth-focused tone, talking about Uber Eats, and they're working on Uber Freight. I think they had an announcement today. So it's very much still a company that's focused on we're a world-changing business, not one that's focused or talking about generating cash flows anytime soon.
I love how you talk about a Peter Pan syndrome in your story. Will venture capital continue to fund Uber if it doesn't at some point grow out of the Peter Pan stage?
Well, it's beyond venture capital. The country of Saudi Arabia is almost more accurate to think about it. They invested $3.5 billion in Uber directly and are a major backer in SoftBank's Vision Fund, which of course made a huge share purchase at the beginning of the year. So, I think given there's so much momentum and support around the company, it seems if Uber wanted to tap other global sovereign wealth funds, there's probably that opportunity, and they have SoftBank on their team now. Of course, it's just a matter of sort of macro, probably investing conditions. But for the time being, it seems like there's plenty of interest to invest in Uber.
That was Bloomberg Tech's Eric Newcomer speaking earlier to Bloomberg Sherian and Vonnie Quinn. Well, coming up, Bitcoin mining has taken a lot of heat for all the heat it generates. We'll talk to the man behind one crypto mining company that went public today. That's next. This is Bloomberg. BlackBerry is suing Facebook for patent infringement, claiming the social media giant uses its technology in Facebook's messaging apps. It's asking that Facebook be ordered to stop providing its primary app, as well as Facebook Messenger, Workplace Chat, WhatsApp Messenger, and Instagram applications and websites. In the past, Facebook execs have complained that in the tech industry, copying what works is sometimes necessary. It publicly credits Snapchat for creating the popular Stories function. Well, it was supposed to be a banner day for Canadian cryptocurrency mining company Hut 8 as it made its debut on the TSX Venture Exchange. Instead, the company backed by billionaire investor Mike Novogratz slumped during its first day listing. Bloomberg's Caroline Hyde spoke with Hut 8 CEO Sean Clark to get his thoughts on the future of cryptocurrency mining and Tuesday's debut.
Simply put, Hut 8 was formed with the intention of providing Bitfury with access to the capital markets. So you can think of Hut 8 as a proxy for Bitfury in North America. So Hut 8 is listed now today on the Toronto Stock Exchange Venture, where it is an on-ramp now for retail and institutional investors to gain access to cryptocurrency mines run by Bitfury, which will ultimately give them exposure to the underlying cryptocurrency without having to actually purchase the cryptocurrency itself.
So that's what's in it for the investor base. What's in it for Bitfury, and by that extent for Hut 8? What does it allow you to raise more money in the future? Because you did a private placement prior to this listing, but the listing doesn't actually raise any money in and of itself.
Yeah, so what it does is it actually grants access to capital in a much more efficient way. So Bitfury is a private company. However, Hut 8 is now a reporting issuer in Canada, publicly traded with stock. So we can now go back to the capital markets and pre-finance out our large electricity footprints across North America. So that also gives institutions access to the future potential growth which we're investing in through the data center rollout.
Who do you think will be the main investor base interested in Hut 8 and therefore in Bitfury? Will it be retail investors, and do you think that's a wise sort of access for them?
Well, we have raised over $200 million in 2 private placements before this listing, with Bitfury having the largest minority stake, and the rest of the shares are actually owned by 46 financial institutions in Canada and the United States. So with this listing, we expect that retail investors will gain exposure, and we're confident that the stock will perform based on sound fundamentals, because at the end of the day, why Hut 8 is unique is because of its relationship with Bitfury. We will have proprietary access to chips that are developed, so we will always get the best chips. We have zero operating risk because Bitfury has been operating data centers since 2011. And in addition to that, we will gain capital in an efficient way through the capital markets, which will allow us to establish large electricity footprints to create large industrial-sized data centers.
You talk about the electricity footprints. This is something that's becoming more of a concern, in fact, about Bitcoin mining and crypto asset mining, is the climate change effect, if you would, and the electricity that is needed. There's now a push, particularly by the Ethereum community, to move to a proof of stake rather than a proof of work concept that mining has. Is that in any way a business model risk for you?
No, it's not, and there's 2 reasons for that, because Bitcoin will always be in proof of work, and the electricity that it's consuming, basically, it ensures immutability. So Bitcoin will be one of probably 5 to 7 major protocols that will underpin the digital currency asset class over the next 3 to 5 years. And so by consuming a large amount of electricity, the Bitcoin blockchain will guarantee immutability. It's a security protocol that is very, very important to the entire asset class. Proof of stake is efficient for other cryptocurrencies. However, at the end of the day, the Bitcoin blockchain will always be in proof of work, consuming electricity, because that is the security that it represents. And the second point I wanted to say, in terms of the high electricity consumption of Bitcoin, there's a little bit of let me put it into perspective. If you look at gold, if you look at mining resources, if you look at the pulp and paper, if you look at the traditional banking financial rails, the amount of electricity that those industries consume from soup to nuts is an order of magnitude more than what the Bitcoin blockchain is consuming. And furthermore, you can actually pretty much guarantee that sustainable energy is, as it's becoming a lower cost, it will drive adoption, and more innovation will come in renewable energies simply because it's more efficient. So I think at the end of the day, the digital currency asset class is going to help the entire economy and make energy production and consumption much more efficient.
You talk there of Bitcoin being one of the key protocols going forward over the next 5 to 7 years. Is it scaling currently to be able to ensure its future past 7 years? We heard from Mark Carney, the Bank of England chief, saying, look, the crypto assets you have in your wallet today won't be those of the future. How do you know Bitcoin really is here to stay?
Yeah, so as I mentioned before, Bitcoin will be one of many major protocols, but it's the proof of work and the security protocol aspect of Bitcoin and its immutability which will guarantee its long-term success. Now, Bitcoin itself is working on off-chain transactions like Lightning Network, which will basically allow the Bitcoin blockchain to be used in transactions that will be able to process 1 million transactions per second, whereas Visa and MasterCard max out at about 50 to 60,000 transactions per second. And again, that is how the Bitcoin blockchain will remain relevant because of the security base that it has and the immutability. But the Ethereum protocol, also very important. It's the smart contract protocol. It's the glue. It's the logic that operates all the code. So there's going to be 3 to 5 other protocols that maybe haven't yet been created, but we're still in a very nascent stage of this asset class. It's a $500 billion asset class. RBC projected that it could be a $10 trillion asset class. We're bullish. We absolutely agree. And when you buy shares of Hut 8, we are agnostic on the price of cryptocurrency and the protocol or the cryptocurrency itself. We're laying industrial-sized data centers that will mine all major protocols. So when you're purchasing shares of Hut 8, really you're buying a royalty because we have a low cost base and we keep the underlying cryptocurrency. So investors that like that royalty profile for a stock, that's something that would interest them when they purchase Hut 8 shares.
That was Hut CEO Sean Clark speaking with Bloomberg's Caroline Hyde. All right, coming up, the battle for the cloud continues to heat up. We'll talk to the man behind one company looking to stave off giants like Microsoft and Amazon. That is next. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Here's a check of your first word news. Secretary of State Rex Tillerson says China's approach to development in Africa encourages dependency that undermines its sovereignty. He spoke before embarking on a 5-nation tour across the continent.
We have an opportunity to be part of Africa's journey to a stable, prosperous future for its people. Each of these priorities, trade and investment, good governance, respect for human rights, combating terrorism and instability, have the same guiding principle in mind.
The Senate's top Republican has added his voice now to the chorus of concerns over President Trump's plan to impose new tariffs. Kentucky Senator Mitch McConnell gave his first comments since the White House announcement.
There is a lot of concern among Republican senators that this could sort of metastasize into a larger trade war. And many of our members are discussing with the administration just how broad, how sweeping this might be.
And a federal judge says the Trump administration's decision to end DACA was lawful. The ruling increases the chances the issue will end up before the Supreme Court. Now, we've got some breaking news we want to share with you. The New York Times is reporting Gary Cohn will resign as Trump's top economic advisor. Again, the New York Times is reporting that Gary Cohn plans to step down. We'll have more on this throughout the hour. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. here in Washington, 6:30 Wednesday morning now in Hong Kong, where we're joined by Bloomberg's David Ingles with a look at the markets. David, good morning to you.
A very good morning to you, Elisa. Yes, I mean, just to add to what you said, so these lines are dropping there. New York Times, as you mentioned, reporting Gary Cohn to resign as Donald Trump's top economic advisor. We're looking already at a little bit of reaction right now. Have a look at dollar yen. We're down about 0.2%. So we're getting some dollar weakness on the back of that news. When you look across some of these major currencies, do expect a little bit more movement here in about an hour's time. That's when Tokyo really gets underway. But as you can see, a fairly noticeable move already there, down there in dollar yen. Other things I want to mention, though, when you look across the equity space here in the Asia Pacific, we're likely looking at gains at the open, especially in Korea, where you look at futures, they're up 1.1, 1.2% on the Kospi 200. GDP comes out of Australia there as well. Lots to talk about today. I'm David Ingles here in Hong Kong. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. The world of cloud content management got some big news in the last couple of weeks when Dropbox announced it was the latest such company to file for an IPO. One company that beat them to the public punch was rival Box, which recently announced that its revenue missed estimates, sending its share price down. Shares have picked back up in the last couple of days. To get deeper into Box's recent results, I want to welcome CEO and co-founder Aaron Levin.
Oh, that's not the best chart to show at all time. Can we change the chart?
Look,
okay.
The last couple of days have been better, but
yes,
there's concern about the competition.
Yeah.
There's always been concern about Dropbox,
yeah,
but decelerating growth.
Yeah.
What do you have to say about that?
Yeah, a couple of things. So I'll try and kind of clarify as much as possible. So Q4 itself, the quarter we just came off of, was by all accounts very strong. So we did 136.7 million in revenue. Analyst estimates were at exactly that number, and that was the range that we guided to. We did a couple hundred million, over 200 million in billings, over 13 million in free cash flow. So really strong quarter overall, and it was sort of really what Box looks like when we're executing at our best, serving some of the largest customers on the planet, insurance agencies and companies, major banks, government agencies. So we did 78 deals over $100,000 and 9 deals over $1 million. What ended up happening was we guided to a decelerated rate for FY19, the year we're in right now, and certainly that was lower than analyst expectations, hence the pressure on the stock. And really the reason for this is we are transitioning from a single product company to a multi-product company, and as we are doing that, the way that we're selling is to serve bigger customers and bigger deals, and we wanted to make sure that we set ourselves up for a really good foundation for the year that would have some levers for accelerated growth either later this year or especially next year. So we're still on our path to $1 billion in revenue over the next few years, but we did want to make sure that we were a little bit more conservative in how we were guiding.
Now, I know you've been asked about Dropbox many times over the years, including by yours truly.
Yeah, thank you.
Now that you've seen the numbers and they have filed to go public, are you concerned about the competition?
I don't think the numbers or the S1 sort of changes are the competitiveness of the business. So we've generally kind of known at a high level how they were performing. I think Dropbox's numbers are sort of a tale of two types of companies. One is a consumer revenue business, and that's about 60 or 70% of their revenue. That's end users or consumers like you and I using it for either professional or personal use cases. And then about a third of the revenue is B2B. And so that is probably the only part of the business that looks anything like Box. And that tilts much more to small business or teams, whereas our revenue tilts toward mid-sized companies and large enterprises.
And why couldn't they go after the large enterprises?
Well, I think that they've, in some cases, been trying over the past 5 or 10 years, and I think they've ended up tilting their focus back to where they're really, really good on the consumer SMB side. And our companies over time have evolved to look very different. So the kind of sales force you need, the kind of consultants you need, professional services, the level of security, compliance, and regulatory controls you have to build into the platform end up looking like a very different company at scale. So the thing that our 1,800 employees do every single day looks very different than what Dropbox's employees do. Even though maybe in name we are similar, where we both store, let you share files, the General Electrics of the world or the Eli Lillys of the world end up needing a different type of functionality, and that's what we've largely focused on in the past decade.
You've got a couple years on them as a public company. Any advice for Drew Houston?
I generally don't give that much advice to pseudo competitors, but I think the more that we can obviously both be as clear as possible in our two businesses, the better. I think this is going to put a massive spotlight on this industry. I think that's good for both of us. We're collectively going after a $40 to $50 billion market, so there's no shortage of addressable market for both of us to go and tackle. And so we're, again, focusing more on enterprises. They're focusing more on consumers and SMBs, and I think there's plenty of market for both of our businesses.
Now that Box is cash flow positive, you said you're going to start investing more. Where? Are there any features out there or companies that you might like to acquire? Yeah, so I'm not going to be able to announce any kind of corp dev moves today, but
why not?
Sorry, it just IR and PR and corp dev and honestly the SEC, they all have problems with this. So someday we'll be able to get there. But we are very focused on certainly our organic growth and our organic investment in R&D. We do tuck-in acquisitions here and there to accelerate our roadmap. But the best way to think about our roadmap is if you are a 50,000 person company or a 100,000 person company and you're transforming how your business works or operates in the digital age, maybe you're a bank, maybe you're a life sciences company, maybe you're a government, we want to be the backbone for how you're managing, securing, and working with your information. So we have a lot of products that deal with bringing more intelligence into Box and AI into Box, a lot of solutions that go deeper into security or compliance to be able to better serve our customers. So these tend to be the focus areas for the business right now.
Bloomberg has just confirmed that Gary Cohn is leaving his post at the White House.
Breaking news.
Obviously, was a COO of Goldman Sachs. This has been speculated for a while now. You've been a very outspoken opponent of the Trump administration. What do you make of this in the context of, in general, where we are more than a year into this administration? Like, are we better or worse off than you thought we would be?
I honestly, we are so off the path of where I could even imagine. Because generally we tend to think linearly about these things, and this has just been very nonlinear. So I think the Gary resignation would just lead to more, internal chaos that I think we've already been seeing. So incredibly hard to know how I would compare, where we are today versus where you could have been, thinking a year ago or whatever. But in general, it's not good to see that lack of stability and maybe steady hands of some of the people that he was surrounded by.
Do you think it'll hurt business?
I have no idea. I mean, I think that businesses and the market probably appreciated having somebody with Gary Cohn's background and maybe political sort of views involved in the administration, very pro-trade, very sort of oriented toward a growth economy, and so I think that this could put some risk from the policies, and that's really what matters a lot with these types of roles is who is advising the president, and then ultimately what are the policies that we see enacted, and I think having somebody like Gary out of the system, and not advising Trump is I can't imagine is a positive thing.
All right. Box CEO Aaron Levie, always great to have you here on the show. Thank you so much. We're going to talk much more about Gary Cohn's resignation coming up in the next block. We're continuing to cover this breaking news. President Trump's top economic advisor, Gary Cohn, is stepping down. President Trump says in a statement that Gary has been my chief economic advisor and did a superb job in driving our agenda, helping to deliver historic tax cuts and reforms and unleashing the American economy once again. He is a rare talent, and I thank him for his dedicated service to the American people. We're going to continue to bring you the details on this story as we have them. This is Bloomberg. A developing story coming out of Washington. Bloomberg is now reporting that Gary Cohn is resigning as President Trump's top economic advisor. Cohn, in a statement issued by the White House, says it was an honor to serve and highlighted in particular the passage of historic tax reform. Cohn says he is grateful to Trump for the opportunity and wishes him and the administration great success in the future. Our Bloomberg Chief Content Officer, Marty Schenker, happens to be here in San Francisco, joining me in the studio with more. Look, we heard this was coming. Actually, we've heard this was coming for months, and it hadn't happened. Now it has. What do you make of it?
Well, what I make of it is we reported a story this morning that said that if Donald Trump was going to impose these tariffs, which he was strongly against, that he would resign. Does this signal, in fact, that Donald Trump is not going to change his mind and impose the steel and aluminum tariffs? If you listen to Donald Trump today, he said he would. So out goes his chief economic advisor. I mean, if you're the chief economic advisor and the person you're advising is not taking your advice, it's time to go.
Gary Cohn is a Democrat. He contributed to Hillary Clinton's campaign. He was sort of an unlikely candidate for this job in the first place, you know, but he took it.
He took it.
You know, what do you make of it coming to an end so quickly? Though, you know, I guess supposedly in the context of some of these other positions, maybe it's not so quick at all. This is an administration that has had an incredible amount of turnover.
Yeah, 1 year in the Trump administration is like 4 years in any other one. So, and given it, look, it was not a normal work environment in terms of presidential administrations. He did orchestrate the tax bill. He said that that was the reason he was there, to try and get that through. I could take some issue with it is truly tax reform, and there are a lot of people who are very critical of that tax package. So it'll be very interesting to see who replaces Gary Cohn in this administration, and what is he going to be part, or she? Are they going to be the free trade wing, or are they going to be the protectionist wing?
What do you suspect?
I suspect it will be more towards the protectionist wing.
And what does that mean for business?
It means, well, look, business. This has been a pro-business administration. The issue of being protectionist has not been tremendously fulfilled by this Trump administration so far. The tariffs are the strongest effort he's taken on that front. Is this Donald Trump doubling down on his rhetoric? It may very well be. And that will not be good for business, as the markets have shown.
Where do you think Gary Cohn ends up after this? I mean, for a long time, some thought he was heir apparent to Lloyd Blankman at Goldman Sachs. When he left, it was clear that was not the case.
That was the signal, right.
Right. So, you know, what next?
Well, you know, it's very interesting that his departure comes right after Dina Powell was rehired by Goldman Sachs and actually elevated. The idea of him returning to Goldman Sachs is probably a non-starter. I don't think there was some disenchantment with him within the firm. Will he return to Wall Street? Well, he has some credentials he's got to reestablish with Wall Street. I mean, don't forget, his tax package removed the state and local tax deduction for places like New York, where all the investment bankers live, and in California. So whether he does philanthropic work, he's very active in that area, remains to be seen. He certainly doesn't have to work. He's independently wealthy, and he can basically pick his shots. But I do not think he'll wind up on Wall Street.
What about his reputation now that he has taken this job, you know, that some people, you know, might not have approved of?
Yeah, I mean, I think he has to overcome that. I actually think his legacy as a financier and as a philanthropic force will probably override those concerns, but it's going to take a little time. He'll probably take some time to figure out what he does next. And whatever he does, it's going to be something he wants to do rather than something he's forced to do.
So let's talk about what this means for the Trump administration, which obviously day after day, it seems like there's somebody leaving every single day.
But it's not chaos.
But it's not chaos. You know, how does the administration recover?
Well, I mean, let's not overstate things. I mean, Gary Cohn was an important force of free trade and market forces within the administration, but ultimately Donald Trump runs this presidency, and everything goes through him. They did accomplish tax reform. They have accomplished deregulation. It looks unlikely they're going to get infrastructure, so it'll be very interesting to see, again, who gets this position after him. If it's Peter Navarro, who seems to be ascending, I think that sends a very, would send a troubling message to some participants in the market who feel that, you know, the pro-growth globalization force that has propelled this economy for so long will be held back.
Well, and it's not just about Gary Cohn. I mean, there are reports of other departures coming, and certainly in the last few weeks, I mean, we've seen more turnover than perhaps in any administration in history.
That is true. And what's more troubling for this administration is their inability, amid this seeming disruptive atmosphere, to attract and hire really quality people. We know that they are having trouble getting qualified people to join this White House because of the outward chaos that emanates from this White House.
Since you're here in Silicon Valley, I was just speaking with Box CEO Aaron Levy, who was vocally against Donald Trump. In fact, most of Silicon Valley, was very open about, not supporting this president. We've seen a couple of meetings between the president and Silicon Valley CEOs. Not a lot has come of them. Do you have any indication of the state of the relationship between Silicon Valley and Washington at this point, or is it basically just on pause?
I think it's basically on pause. I think Donald Trump knows where he stands in Silicon Valley and, frankly, doesn't really care. I think one interesting thing that's coming up soon is this whole issue of intellectual property theft by China, and Donald Trump's promise to do something about that. That will be viewed as a very positive development in Silicon Valley and a very strong step against something that has bedeviled this industry for a long time. So despite the fact that Silicon Valley doesn't support Donald Trump, he will actually take steps to protect some of their most valuable assets.
Axios is reporting that the president has already canceled a tariff meeting that Gary Cohn had arranged.
The Thursday meeting.
On Thursday. So the process of undoing is already underway.
It is. And in fact, there was some reporting. We heard that Donald Trump was going to announce his tariffs before that meeting, which would have been a tremendous snub to Gary Cohn. I think he front ran that situation.
All right, Bloomberg's Marty Schenker. I'm glad you were in town
it's great
for
to be
this
here.
one. Thank you so much. Great to get you on the set. We're going to continue to follow this story.
Yep.
Coming up, as the annual National People's Congress is underway in China, we'll look at the relationship with tech leaders and President Xi Jinping, the most powerful Chinese leader in decades. This is Bloomberg. We're continuing to cover breaking news that Gary Cohn has officially resigned as President Trump's top economic advisor. For more, I want to get to Tokyo, where we're joined by Peter Elstrom, Bloomberg's managing editor for Asia tech coverage. Obviously, this is news that will be noticed in China, Peter. And what is the impact of this, especially considering the issue surrounding these tariffs?
Certainly, it's big news here. It looks like Gary Cohn, who had opposed many of these threats that the administration was making about imposing on tariffs on aluminum and steel and that sort of things is now leaving the administration. That's a sign that they're getting more serious about some of these tariffs and the trade restrictions. That's a concern for many of those who have supported more free trade. And I think in particular in the case of the technology companies, it may shine more of a light on some of these protectionist measures or allegations of protectionist measures within the technology industry. As we've seen, Facebook and Twitter, Google, many of the other American tech companies cannot operate within the Chinese market because of some of the restrictions there. And at the same time, companies like Tencent, now the most valuable company in China, is able to market its WeChat services and other kinds of services in the U.S. That's an issue that the ambassador to China has raised in the past, and it now may get more attention because of these tensions.
But is there any likelihood that that will change in the near future? I mean, now we know that the Chinese government has removed this 2-term limit for the Chinese president, which means President Xi Jinping could be in power for many, many more years. And the Communist Party in the last few years has not budged on their position around censorship and how that impacts some of these U.S. technology companies. If anything, they've only gotten more strict.
Yeah, it certainly doesn't look that way. I think for a long time there was an expectation that China could not maintain the kind of censorship and controls that it has over the internet, but that's really changed in the past few years. Xi has imposed even stricter controls. You're going to see at the end of this month new controls going into effect on the internet companies that operate there that have to do with data sharing and government access to data. So they're moving in the opposite direction at this point, and that probably means that for Facebook and other companies that have hoped to get get into this enormous market, their chances are very, very long at this point. So right now at the NPC, what we're seeing is the technology leaders in China are coming out and voicing their support for Xi and the Communist Party. They feel like the system that they have in place has worked very well, and why not? Tencent and Alibaba are now among the 10 most valuable companies in the world, and they're expanding. They're using that profit haven to expand globally at this point.
As you mentioned, the NPC, the National People's Congress, the annual meeting of Chinese communist leadership happening this week. There will be various tech CEOs, China tech company CEOs in attendance. What are you watching for, and what are the importance of these meetings and sort of showing face, if you will?
Well, the big news is going to be that they're going to remove term limits for the president so that Xi, as you mentioned earlier, will be able to stay in power for longer than the 2 terms that has been accepted up until this point. For the tech leadership, it's important to show their faces. They voice support for the administration. Pony Ma, the head of Tencent, came out earlier and he talked about the importance of integrating southern China and Hong Kong in particular. Many of the CEOs, including Robin Li at Baidu, talked about how he wanted to have his shares traded within mainland China. They trade in the U.S. right now. So they're sort of signaling their support for the Communist Party. And in turn, that helps signal for more junior officials throughout the country that these guys are part of the political leadership.
All right, Peter Elstrom for us there in Tokyo. Peter, thanks so much for that update. That does it for this edition of Bloomberg Technology. A reminder, we're live streaming on Twitter. Check us out at Technology, weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.